Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Eamon Nolan. He's a partner at Vinson Elkins to discuss the one-year anniversary, actually today, August 16th, of the Inflation Reduction Act, how it's been performing and what else needs to be done to further make those goals happen, right, Eamon? So how has the IRA increased companies' participation in 2023?
Sure, Jill, and thanks for having me. It's been a pretty interesting mix of participation. I think we've seen a lot of different industry players come into this market as a result of the Inflation Reduction Act. Some of those have just been traditional, renewable developers that have really just kind of had the ability to expand their offering, to do more projects, to push. Others have been because these tax credits are now transferable, and so you're seeing a bigger audience of companies be able to come in and take advantage of monetizing those tax credits. So they're not traditional energy, but they say, look, we've got profits, we can use these credits to offset against it, and we can buy them at some discount to 100 cents in the dollar, so this makes sense to us. Otherwise, we've seen just interesting participation, mining and manufacturing, that has obviously was specifically targeted in the IRA as being something that could benefit from tax credits. And so there's been lots of ways in which they've started to come into the space and say, look, IRA's changed the economics here, let's come and play.
So is that really how the IRA opened up opportunities for companies outside of what you would consider the energy industry? Like for tech companies, for example? I mean, tech kind of fits into this as well.
Yeah, I mean, look, obviously a big bucket in the IRA is the innovative technology component of it. So, like the way, at least I think about the IRA, there's kind of there's sort of two ways to play. There's the tax credit way, where you can either develop a IRA eligible asset and take advantage of tax credits. But the second part is also all the money that was allocated to the DOE to provide loans and help people kind of participate in other ways. And when you've got the DOE being a lender in greenfield projects and newer technology projects, inherent in that is that they're willing to be a little bit more risky than the commercial bank markets, the traditional lenders in this space are willing to be, because they're trying to grow an industry, to create domestic production in certain industries, or to help, supply chain issues, to help domestic mining of lithium, for example. Like there are lots of different ways in which the DOE is kind of a big force as part of the IRA. So it's kind of both ways, and we're seeing both of those play out.
So how are the tax credits playing out? And perhaps even before we get to that, what are they basically? Who establishes the value? How are companies using them? How do you determine how many tax credits this company gets versus company B?
Sure. Yeah. There's a base level of credit that most projects can be eligible for. So when I say most projects, most of these projects that are in some way designed to decarbonize the US energy economy. So it can be a solar or a wind project, or it could be a carbon capture project where you've got an existing emitter looking to reduce their carbon emissions. There's the battery storage. There's lots of different projects that are eligible for a credit. And there's a base level of kind of credit that they're all eligible for, and that's very specifically mandated project by project. And then there are additional things you can do to get eligibility. So if you use domestic content, you can get these things called adders. You've got to comply with local labour requirements and making sure that effectively you are using domestic labour in a sort of, for want of a better phrase, union-friendly way. You are paying prevailing wages in the region. So you start at a base level, and then you can get the adders depending on your kind of the way in which you are developing your project. So, but each project is kind of, the IRA, we call them the IRA buckets. It's basically all of these asset classes that have legislative eligibility for a tax credit. And the way the credits can be monetized there's different ways. Mostly the traditional way is that you need profits to offset against the credits, and most developers don't have profits, or at least sufficient profits to be able to monetize all those credits themselves, because you're talking about 30, 40 in some cases with the adders, 50% tax credits against the kind of for simplification, but it's just the cost of constructing the project, the sort of value of the project. And so you get these tax equity investors to come in and say, we'll monetize those credits. So we'll take the benefit of the credits and we'll give you money for that, and use that money to build the project. And so that's kind of one way. But what IRA did was really open up some other avenues. And the big one is the transferability regime, where you can have credits that you have benefit from and you can sell them in the free market. So a company can just come in and say, you've developed this project, you are eligible for these tax credits. I'll pay you 90 cents on the dollar for those tax credits. So I'll get some discount to it, and then I'll use those tax credits to offset against my income, and we all win, right? And so like that's a big feature of the IRA. And then the other way is direct pay, which is not available to all asset classes, and in some asset classes it's only available to specific types of investors like tax exempts, charitable institutions, where you don't need a profit to offset the credit against, you just get a check from the IRS.
Right. So where are you seeing the most interest from clients?
Traditional solar and wind is still the easiest market to get projects done, right? Like, I mean, people understand that the technology is advanced. So onshore wind, onshore solar, that is a huge, I think that's a huge part of the IRA economy, for want of a bit of a phrase. Where we're seeing kind of new asset classes being pushed, I think a lot of people the carbon capture is a huge part of this, because there are all of these existing assets and infrastructure in the United States that are pretty emissions heavy. And by bolting in CCUS, carbon capture infrastructure, they can reduce their emissions and benefit from credits, which obviously can improve the economics of an existing project. So there's a ton of interest there. And then I think, in terms of the other new asset classes that were by design targeted by the IRA, hydrogen and ammonia, I think they're probably at the earliest stage of this, because the hydrogen economy is really very much a grey economy, and there's a chicken and egg problem in that space, I think, where you've got the technology that probably works and it's becoming very cost competitive with traditional hydrogen consumption, but the demand side is not really changed. We still haven't transformed our heavy industry or our concrete production and other things to rely on green hydrogen in a way that would kind of open that market up in a significant way.
Well, it's interesting because I read a recent report on the progress of the IRA, and solar and wind projects actually saw a decline. Why do you think? Do you think it's because resources are being targeted towards some of the newer verticals that you had mentioned?
I think there's probably a combination of issues there. I mean, I think supply chain is still a problem. We're still seeing like ongoing knocks in the supply chain. Interconnection is a huge problem. We still have a grid in the United States that's not designed for renewable energy generation. We've sort of have not set ourselves up in a way that you can take the generation to the populations in an efficient way. We need a significant amount of new transmission capacity in this country in order to really meet the supply that's coming from all of these projects. And without that, you have constraints. Interconnecting into the relevant markets in which the projects are developed is a tricky process at the moment. There are some worse than others. The PJM is very difficult at the moment to get your interconnection. It takes time and you're in a queue, and so there's a backlog. So, I think we're suffering from, frankly, like the success of the act in some ways. Like there are so many projects that are coming to market, and it's a question of like, can you actually get them interconnected into the grid?
But that said, the U.S. is expected to only increase in attractiveness for these types of investments over the next 3 years.
I wholeheartedly agree with that. I mean, I think the credits have really changed the game. I mean, we've always, before the IRA, I think we, as a firm, anecdotally would say like we had seen the shift in the in the economy, the way in which investors were coming to the energy transition space. Felt like it was a tidal wave you couldn't stop anymore. The money had come. Investors were pushing it that way. The IRA has only accelerated that process and kind of strengthened that tidal wave, if you like.
So, Eamon, when you think about what's next, what else can be done to maximize the impact of the IRA?
Well, look, I think the DOE is doing a fantastic job, and we will see a lot of new projects coming to market over the next 3 to 5 years. They are financing a lot of very large-scale energy and infrastructure projects across the country that require a huge amount of capital. And obviously, at the moment, that looks like jobs and a little bit of an injection to local economies. But what that will ultimately do is transform a lot of like the way in which the energy economy is actually financed, supplied, functioning in the United States. So I think that'll be a big part of it. We'll see mining and minerals, we'll see manufacturing, we'll see some very large CCUS projects getting financing and sort of proving out technology at a very large scale. So I think that's it's kind of been done, or it's being done right now, but we just haven't felt all the effects of it. And then I think going back to hydrogen and ammonia and these sorts of things, I do think like we're really approaching very rapidly a point in those markets where those economies will get unlocked, where we're seeing green hydrogen facilities being built at a large utility scale, and they have offtake and they're financed properly, and that'll sort of transform those markets.
But when you think about the act, if we were to get an administration change, I mean, at some point we're going to, is that going to be altered at all? Do you think that will stay the course?
I'm an optimist. I hope not. You never know. I mean, I think it would take probably like control of Congress and the presidency to overturn that. And even then, I think big business, traditional energy as well as new energy, as well as many other players that are not traditional energy investors, are all benefiting from this. It's traditionally pretty hard to undo a program that is business popular, and so I dare say that undoing it wholly is probably pretty improbable, but you never know. Were that to happen, I think we'd be back in this awful world of like annual increases in extensions to renewable credits and all those sorts of things, which nobody wants, frankly. So I think that's probably unlikely, but you never know.
All right, Eamon, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.